300 stores. Gone. Not from a war, not from a flood, not from a recession, but from something far quieter, something more dangerous, a slow, invisible shift. The market moved, consumer habits rewrote themselves, and Papa John's stayed still. Now 300 locations are closing across America. But here is the real question. Is this a collapse or is this a reset? Most people are asking the wrong question entirely. Let's find out. To understand what went wrong, you need to understand the beginning. Papa John's was founded in 1984 in Jeffersonville, Indiana, a small Midwestern town with a very big dream. John Schnatter started from almost nothing, a broom closet, a used pizza oven, and 300 borrowed dollars. That was the entire beginning. He sold pizzas to survive. He sold them to save his father's struggling bar. The bar was failing fast. The family needed money urgently. Pizza became the answer. Within 2 decades, Papa John's became number 3, the third largest pizza chain in America, behind Domino's, behind Pizza Hut. Their tagline was simple: better ingredients, better pizza. That wasn't just marketing copy. It was a strategic promise, a deliberate brand position. We are not the cheapest, we are the best quality. For many years, it worked. Customers believed it. Sales climbed year after year. The brand expanded globally. Thousands of locations opened. The company felt unstoppable. But something quietly changed. Nobody saw it coming. Let's start with the numbers. In 2025, same-store sales fell. Not slightly, a 5.4% decline. In Restaurant Business reported this, and that number carries weight. Same-store sales measure existing locations only, not new openings, not total corporate revenue, just real store traffic, real customers, real orders. A 5.4% drop means fewer customers ordering weekly, fewer pizzas delivered nightly, and fewer transactions every single day. Not because the pizza suddenly got worse, not because quality collapsed, but because competition multiplied. The entire food landscape shifted. Mexican concepts grew rapidly. Korean fast casual expanded nationwide. Coffee-focused brands spread everywhere. Premium burger chains multiplied fast. Friday night pizza still exists. That ritual did not disappear. But now 20 different options compete for the same moment, the same household budget, the same hungry family decision. Papa John's wins that decision less often than before. That is the quiet crisis. No explosion, no single dramatic event, just slow, steady drift. And drift at scale destroys franchise economics silently. Think about it simply. One family orders pizza every week, then every other week, then once a month. They didn't leave forever, they just drifted away. Multiply that by thousands. That is how brands erode. Now, let's talk about costs. Revenue falling is already painful, but rising costs at the same time? That is a completely different problem. Cheese prices stayed elevated. Post-pandemic commodity markets never fully normalized. Cheese is the single largest ingredient cost inside any pizza business. It is not negotiable. When cheese prices spike, pizza margins compress immediately. Simple, brutal arithmetic. Flour costs followed. Dough prices climbed. Supply chain pressure continued. Then came the labor problem. Multiple U.S. states raised minimum wages: California, New York, Washington. Delivery driver wages increased sharply. Gig platforms competed for the same workers: DoorDash, Uber Eats, Grubhub, all pulling talent away. Franchise owners felt every squeeze. They operate on thin margins. Corporate sets menu prices. Franchisees absorb the costs. Revenue falling from the top, costs rising from the bottom, margins crushed from both sides. Eventually, the math breaks. The store stops making sense. The store closes. 300 times over. Here is what nobody discusses. All three pizza giants made very different bets at the very same time. Domino's made the boldest move. They stopped competing on taste. They started competing on technology. GPS delivery tracking, mobile app ordering, voice ordering systems, loyalty rewards programs, the Anywhere ordering platform. They rebuilt from the inside. They became a tech company that happens to sell pizza. The stock market noticed. Customers rewarded them. Domino's transformed completely. Pizza Hut found their lane. They leaned into dine-in tradition, built strong Hut Rewards loyalty, and created a clear identity. Papa John's stayed with better ingredients, better pizza. Same positioning, same message, year after year after year. Clear identity can be powerful unless the market shifts beneath you. Customers started rewarding speed, digital convenience, and seamless app experiences. Every competing chain upgraded. Every brand improved their food. The meaningful gap Papa John's owned, it quietly closed. That is extremely expensive to lose. And losing it quietly is harder to diagnose than losing it loudly. That is what makes it dangerous. There is one more layer, a layer most coverage skips. In 2018, a crisis hit. Founder John Schnatter made controversial public statements. The fallout was immediate. Reputational damage, severe. He stepped down from leadership. NFL sponsorships ended abruptly. Major brand partnerships dissolved. Brand trust took a real hit, and years of rebuilding followed. Now here is why it matters. During those exact years, Domino's was at peak execution, peak technology rollout, peak loyalty program growth, peak market share expansion. While Domino's sprinted forward, Papa John's managed the fallout. Catching up to a moving target is the hardest race in business. You are not just improving, you improve while losing ground. That is the real hidden cost. Not just bad press, but lost momentum. Gone forever. The store closures are not alone. Yahoo Finance reported this clearly. 7% of corporate staff is also being let go. Headquarters employees are affected, including strategy teams, marketing divisions, operations, and corporate support roles. This is a complete company reset. Field operations restructured, corporate leadership restructured, both happening at once. The message is unmistakable. The cost structure must shrink to match the new revenue reality. This is not panic. This is painful but strategic. Clean the foundation first, then build something new. So what happens next? This is where it gets interesting. The strategy is not retreat. It is precision surgery. Close the weakest locations. Protect the profitable ones. Redirect that recovered capital. Invest in modern store formats. Strengthen digital ordering systems. Rebuild franchise unit economics. Then expand with real confidence. This playbook has worked before in this exact same industry. Fewer stores, healthier stores, higher average unit revenue, stronger franchise partnerships, a sharper, cleaner brand story. Papa John's brand recognition remains genuinely strong today. Millions of American households still recognize and trust it. Pizza holds a unique cultural position in America. No other category replaces it. Friday night pizza is a ritual, and that occasion is not disappearing. The foundation is real. Strong brand recognition exists. A loyal customer base exists. The pizza occasion still exists. The opportunity is still real. The only question is, what gets built on it and how fast they build. 300 stores closing, 7% of staff gone, sales down 5.4%. Those are hard numbers. Nobody is pretending otherwise. Nobody is sugarcoating this. But scale matters. Papa John's still operates thousands of locations globally. This is a restructure, not a disappearance. Here is the distinction. Failure looks like denial. Failure is pretending nothing urgently needs to change. This is not that. This is acknowledgement. This is strategic clarity. This is discipline. A company saying out loud, the old model is exhausted, the world has moved forward, and we are choosing to move too. Even when that means getting smaller before growing. The brands that survived moments like this all shared one quality. They got brutally honest before it was too late. They chose discomfort early over disaster later. That is the lesson here for every business watching. Papa John's stands at that crossroads. The story is not finished. The result is not written, not yet. What they do next will be the real case study. The industry is watching, analysts are watching, franchisees are watching. Watch it closely. If this gave you clarity, hit subscribe. We publish every single week. See you next time.